Welcome to Assignment 3 of the Manual and Computerized Payroll course. This assignment covers the impact of changes in legislation on net pay and calculation of income tax. Pension calculations, joint versus single assessment, and comparisons with previous years are explored in this section. In the first section of this assignment we will calculate tax on a yearly and weekly basis, and compare the impact of changes in legislation on net take-home pay to a previous tax year. So, let's get started. In this section we will do yearly as well as weekly calculations, and we will calculate downwards instead of across. The figures are already calculated for the year 2010. We will do the calculations for the current year and compare the two. The top section involves the standard rate cutoff point and tax credit. The figures are already calculated for 2010 using the correct rates for that year. The next part is the PRSI. You will notice that there was an exemption of $127 per week in 2010, and there is none in the current year. Next up is the health and income levy. This levy was phased out and is not used currently. The universal social charge did not exist in 2010, and it is a significant part of our tax in the current year. All of the above deductions are added up and entered in the total statutory deductions line. The final totals are found by subtracting the total statutory deductions from the gross pay. So, we will start at the top of the page and calculate the yearly and weekly pay. The first thing we need to do is determine the standard rate cutoff point and tax credit for a single person for the current year. This can be found on your blue sheet, courtesy of KPMG. The relevant tax credits can also be found on your blue sheet. We will enter the single person credit and the employee credit and add the two. The weekly credit can be found by dividing the yearly credit by 52. With the cutoff point and tax credits in place, we can now calculate the PAYE. We get 20% of the gross up to the cutoff point and 40% of the remainder. From the total, we deduct the tax credit, giving us the net tax payable. We then do the exact same process with the weekly figures. Next up are the PRSI calculations. You will notice there is no exemption in the current year, whereas there was an exemption of $127 before you paid any PRSI in 2010. In this case we simply get 4% of the yearly gross, and also 4% of the weekly gross. No need to enter anything in the health and income levy line as this does not exist in the current year. The final calculations in this exercise is the universal social charge. This time we use the yearly brackets. 12,012 at 0.5%. Up to 20,484 at 2%. And as we have not reached the next bracket, we use the gross of 40,040 for the final bracket. We then add up the three figures to give the total USC. We calculate the weekly USC in the exact same manner, using the weekly gross instead of the third bracket. Finally, we add up all the statutory deductions and subtract them from the gross, to give us the yearly and weekly net pay. There is one last calculation required for this section of Assignment 3. You will need to show the actual difference in yearly and weekly net pay for the 2 years. Simply subtract one from the other and display clearly on your exam sheet. There is a small theory component in this section. You will be expected to note all the reasons why the net pay in the current year is different than the net pay in 2010. Take some time now to practice this section. There are examples with solutions in the Assignment 3 workbook. You will also get sample exams at the appropriate time from your instructor. The second section of Assignment 3 includes the following: self-assessment versus joint assessment. Calculating pay with a pension. Revenue submission dates and deadlines. Understanding revenue terminology. We will start by comparing single and joint assessment. In this scenario, John and Mary have their tax calculated singly, even though they are married. As you can see, both of their cutoff points and tax credits are equal. John pays no PAYE as his income is lower than his cutoff point and the tax credit is higher than his gross tax. To calculate their tax under joint assessment, we can start by adding their gross pay to give a joint gross of $70,000. If we add their cutoff points, we get a joint cutoff point of $70,600. Immediately we can see that the joint gross is less than the joint cutoff point, therefore there will be no 40% rate applied. We also add the two tax credits, giving us a total tax credit of $6,600. We then complete the calculations as normal, ending up with a net tax figure of $7,400. As you can see, this is significantly less than the singly assessed figure. John had not been using all of his cutoff point or his tax credit. With joint assessment, he can share them with Mary, thereby reducing the overall amount of tax due. Next up, we will look at how a pension affects the PAYE calculations. In this example, Tom has no pension and his PAYE is calculated as normal. Greta, on the other hand, has a pension of $2,000. The first thing we must do is take the pension from the gross, leaving us with a reduced gross of $53,000. The PAYE calculations are then applied to the reduced gross, which results in a reduction of the tax payable. Ignoring the PRSI and USC for the moment, the net take-home pay for Greta is only $1,000 less than for Tom, even though Greta has had $2,000 taken out for her pension. This is a tax advantage designed to encourage people to invest for their retirement. In this part of the assessment, you will be given details of two employees in a table format. One employee will have a pension and you will need to calculate PAYE on the reduced gross. The table will also show the yearly cutoff point and tax credit, as well as the PAYE calculated on a single assessment basis. The second employee has worked elsewhere at the start of the year and with us for part of the current year. For the purposes of this exercise, her total pay is found by adding her two employments together. She paid no tax in her previous employment, so her total tax paid calculated on a single assessment basis is $460. Before we look at finishing this part of the assignment, we should take a moment to look at the published standard rate cutoff points and tax credits. This is part of your blue page, which is a page published by KPMG each year, showing the rates for that year. As you can see, the single cutoff point for this year is $35,300. For jointly assessed couples, the highest earner has a cutoff point of $44,300. The lower earner has a tax credit equal to their gross but capped at $26,300. So if their gross is $10,000 for instance, then their cutoff point is $10,000. But if their gross is $28,000, then their cutoff point is the maximum of $26,300. Under single assessment, each individual is entitled to a single person tax credit and an employee tax credit. Under joint assessment, the higher earner has their own credits and also their partner's single person's credit, but not their employment credit. So, in this part of the assessment, you will be given details of two employees in table format, similar to those shown. The tables include gross pay, cut-off points and tax credits, and PAYE calculated on a single assessment basis. In the answer template, you will calculate the same details, but under a joint assessment basis. You will notice the gross pay for employee 1 has the pension subtracted from it. It is important to remember and to do this during the assessment. Once you have entered the gross pay for each employee and added them in the total column, you then need to determine the correct cut-off points. Because the gross pay for employee 2 is less than $26,300, the cut-off point is capped at their gross of $18,800. The higher earner has the increased cut-off point of $44,300. Using the total column only, we can then calculate the jointly assessed PAYE. Next up are the tax credits. Enter the married credit and the two employee credits and enter the total tax credit in the total column. Then, from the gross tax, subtract the total tax credits to get the net tax on a joint assessment basis. Finally, we bring in the PAYE figures calculated on a single assessment basis. These figures can be found on the table given previously. To find the difference between joint assessment and single assessment, we take the joint assessment figure from our calculations and subtract the single assessment figures. We enter the difference in the balance payable or refundable line. In this case, we would have saved $2,400 by being jointly assessed rather than singly assessed. So, that brings us to the end of the calculations for this assignment. There is a theory component in this assignment. Most of the topics have been already explored. Make sure you are very familiar with all of the terms shown. Your instructor will provide you with plenty of practice exams. Make sure you practice until you are confident you can complete all sections comfortably.